All right, Mr. Scott Redler joining us back here on Benzinga's pre-market prep. How you doing this morning, Scott?
I'm doing good. How you guys doing?
Are you in a sauna?
I was going to say that, Dennis. Dennis, you're fired. Quit taking
No, I
my
took your
line.
line.
Yeah, I'm going like this.
Remember
No,
last
you
time,
took the steam
last
a
time I
little
was in a Russian bathhouse.
I was
If
gonna-
you guys look, there's other different kinds of backgrounds you guys could do, but I know you guys like to have your, the logos and everything. For me, I'll just go with what I like to do in the morning when I do my own prep. I usually do it in the sauna. I do it in the ice barrel. That gets my mind ready for the day. So figured why not be in a sauna for the interview today.
I was gonna say
Awesome.
we can tell this is like your indicator. We can tell your market outlook whether you're joining us from the dark and gloomy, Russian bathhouse that looks like it's a little bit, seedier versus this nice sauna where you're, so are you bullish then today? Is that what that means?
I don't know. I'm kind of flexible today because, market's trying to prove that it could hold this upper area after making new all-time high yesterday. You got a little bit of mixed action. I have a bunch of positions working across the board that I'm managing, but I'm, trying to figure out what's going to give me some clues on the day. I guess the real setup or the real story is how does Microsoft react to day 2 of their event, right? Yesterday, Microsoft acted well. They didn't sell it. Usually they always like to sell the event. Usually an Apple event they sell or this or that. So it'll be interesting to see whether or not Microsoft could hold and join some of the mega caps into all-time high land. And that can give us some clues on whether or not tech holds up or it turns into one of those, drifter down days.
All right, well, go ahead, Joe.
I was just going to say, just before you move on, up here, right, you make the new all-time high. So, bullish, right? New all-time highs are bullish and whatever, triple Qs and the S&P. So, you get a couple days of consolidation. So maybe you're neutral to bullish. And I know the indicators that you like to look at, but I listened, like, what to you would signal like, hey, man, we came up, we made this all-time high, but looks like neutral to bearish or just bearish?
Well, it depends on how stocks react this week. Like last week was awesome to be bullish, right? We took out, 524 in the SPYs. We hit a high of 531. That's 5-6 points on top of the move that we saw post-Fed when we broke above that wedge. So now the question is, how do things react? Do they react in a way that's, like you said, neutral to bearish or neutral to bullish? So one of those things would be Microsoft. Like if you looked here on Microsoft, let's go to my chart that I put up here. It's pretty, if you think about it, Microsoft itself has been in this range since like February, right? It's gone sideways for 4 months. So it's not like it's priced for perfection. It's not like it's extended. So here you are, you have 425.81, which is yesterday's high. We're above it. Then you have the all-time high right here of like 430 or 431. So if today everything's excitement and they just could sell the news, and you better be careful. There's not a lot of momentum. Stocks are getting tired. But if all of a sudden today they come out with their event and they talk about their Copilot Plus and how it's more for retail, not just business, and they wind up buying it and it takes out 431, then hey, you know what? There is still some names you could buy high and sell higher, kind of like Google, right? Google gave a little bit of clues that, hey, Google was able to be bought on a dip a week or so ago and it made a new all-time high. Yes, that trade is still there. That trade is still working. So when that trade stops working, then you have to be a little bit careful. So maybe Microsoft we see today. Or like, Netflix yesterday was another trade. If you look at it, look at that. It gave you 2 different types of trades. It filled the post-earnings gap, which was one, then consolidated above the 8-day, and then hit a new, not an all-time high, but a year-to-date high above 639. So these type of trades are still being rewarded. So if all of a sudden it should happen and it doesn't happen, then next time, like, hey, maybe the market's not doing that type of trade right now, so we need to back off that and look for something, a little bit different.
What's interesting is so many of the mega caps now look like they're like, if they're not at all-time highs, they're trying to get there. Like you're saying, Netflix, we're still a ways off. We're 60 points off, but we've come back so far. Google making new all-time highs. Amazon is not far from making new all-time highs. It's basically right there. Microsoft, obviously, consolidation station for 4 months, and it looks like it wants to break out. And even Apple coming back here now. We know NVIDIA is a horse, and obviously that earnings is going to matter on Wednesday, which we can go to in a second here. But what are your thoughts with this mega cap love here again across the board? Like earlier in the year, we saw a separation where some mega caps weren't participating. They were hitting Apple. Now it's like they're buying them across the board.
Listen, there's still some separation. You still have Tesla in the doghouse. You know,
Tesla anymore. I threw Tesla out of the mega cap.
That's gone. All right, Apple was pretty much out of play until post earnings, and that kind of was like reborn. So that's been a good trade. I'll be honest, Amazon's been hard. The last 2 times Amazon went back to an all-time high, it failed at 190. So active traders obviously, weren't happy with it, including me. Every time you thought you could add for some momentum, it pulled back in $4 or $5. So they're still not giving money away on trees because some of these things are there. It depends on how it trades and how you approach it. So, there is opportunities, but it's not that easy. It's never that easy, right? Otherwise we'd all be rich. But they've been going very specifically one at a time. Same thing with Meta. Meta got put in the doghouse a little bit to rebuild when they came out and said that they have to reinvest in more AI. And it's been in a range for 4 or 5 months. So if you're focused on Meta and not on Netflix or Google, you're not, you're upset. So it's like you have to still be prepared and move your go-to list around based on the best setup. And if you only focus on 1 or 2 of them and the other 2 are working, it definitely could be a little stressful. So what you got to do is do a little bit of everything and wait for the action to confirm something. And you have to be right place, right time. It's not just a blanket buy or a blanket sell, which, rarely is. But even in a group like this, it's not all or nothing. It's one by one at different times.
What about NVIDIA? We're going to come into the earnings report that everybody is watching. It's tomorrow night. You got the chart up there right now, so we might as well talk the technicals here. Talk about the setup going into the earnings and how are you playing it?
All right, so I do trade NVIDIA every day because it's one of the best moving stocks out there that if you're right, you get paid. So with earnings out tomorrow, it is priced for perfection. And how many times could it beat and raise? I do think that there's a chance that it does it. As a professional trader, do not take stock into earnings. If you've been in NVIDIA for 2 years and you own the stock, you're an investor, okay, you're doing just great. For me, what I did is, I actually, if you remember this bull flag last week in NVIDIA, I actually was buying the 925 and 950 calls for that and in the stock. So I did get rid of those. Into this little pullback, I said, I'm going to buy the $1,000 calls because my FOMO, everyone has their own kind of FOMO. Some don't want to miss a miss and a down 300 points is, hey, if they beat and they guide and they do a split, it probably takes out 975 and we could see 1050 to 1100. So I kind of don't want to miss that type of trade. So for me, I bought the $1,000 calls for $25 down to 18 and a quarter on Friday. I did trim a little bit into this push up yesterday because I had too many of them. And now if we are to see a push into tomorrow, like just say they want to get back near 960 or 970 prior to the print, I'll use that action to actually make a call spread and finance it a bit. So I'm actually risking a little less, but I'm still involved to not miss that type of move because those type of moves are awesome to catch. If you could also trade it after hours, if all of a sudden, it trades where if some people don't understand what's happening and then it trades through 975, I'll trade it after hours if it gets above and stays above that. So I'm approaching it in a way where I'm defining my risk and I'll have my levels for after hours and hopefully, there's good opportunity. If all of a sudden, they beat, but it's not enough and they guide, but it's not high enough and they don't split, then chances are my option play will lose. And yes, traders do lose money. Even on TV, they say they make it all the time and everyone on Twitter never loses, but I do lose money here and there. So if all of a sudden it trades lower, I'll be like, all right, what levels could be mapped out? So this way, the next day you could perhaps go at it after the binary event and make money that way. So, you have to have multiple plans. And for me, that's the way I'm going to approach NVIDIA tomorrow.
Scott, so right now, looking outside of NVIDIA and the other stocks like reported earnings this week, what have been movers that you've been watching?
Well, what's beautiful? Like, you look at something like Qualcomm. Qualcomm, we talk about pro earnings gaps. Qualcomm came out on, May 2nd. So if you did an option play, you made money, or you could have bought versus, this pro earnings gap and look at this move in Qualcomm. So you're still seeing pro earnings gaps happen, and then they're giving you swing trades thereafter. So Qualcomm was a good one. You mentioned Apple before. Apple was great too. Apple, once it gave you this 180 level here, you could have been long versus it, and it's been trending higher, and you make you make $10 an apple. That's not so bad. So there are still some pro earnings gap type of plays, post numbers, post binary event to trade that's rewarding investors. So it's still showing you that things are trending higher. So that trade is still there. So even if just say you don't take options into NVIDIA because you don't want to risk whatever it is, there might be a pro earnings gap to play for a swing type move. So for now, that's what I'm watching with earnings season behind us. And I've been, to be honest, my best trades this week were really weird ones for me. I've been in uranium since last week and it finally broke out. And I bought a lot more IBIT and BITO calls on Thursday, Friday, thinking that Bitcoin was going to take out 65 to 67,000. And now here we are pausing at 71.
Scott, before we let you go, do you mind telling us a little bit more about this super simple gap trading ebook? We've got a QR code for it on the screen as well as a link in the description.
Well, you know what? As we have Apple, it's perfect. Some people don't want to take a stock into a binary event like earnings. Then all of a sudden you get a big gap up, you define your risk, and it turns into a swing trade right there. I just gave you 2 examples that I teach in that book. Okay, post earnings, you get a big gap. If it doesn't fill that gap, you could trade versus that gap and have a nice swing trade. Look, you could have done it in Apple and you could have done it in Qualcomm. So those are 2 ways to define your risk with a pro earnings gap in order to, to make a bit of a move. And look at that, it's above the 8-day moving average, which is another E-type book that we've done over the years, where once the stock's above the 8-day moving average, there's momentum. There's usually price appreciation. So all of a sudden you do a pro earnings gap and it stays above the 8-day. It gives you 2 reasons to have extra confidence to be long that for a swing trade, and then use your tier system and you add shares and take them off so you can net money and let trailers go.
That's the last question I want to ask you. And obviously you make some fantastic calls, Scott. How do you know when to take the profits? And I've struggled. I've been 25 years professional trading and my entries are excellent. I've never been great on the exits. I usually get out too soon, or, and most of the time it's usually too soon. That's usually my problem. How do you hold on to get the meat? Like I always joke, like I take the first bite and I get a nice trade off of it. And then I watch the thing go another 10, 20%. I'm like, how in the heck did I miss, the bulk of the move here? How do you exit a trade?
Well, you could use your tier system. You could exit some and hold a portion, exit some and hold a portion. And then if it continues so much and you're out of it, just have some gratitude and say, hey, I caught a nice trade. You could use day count rules also. Day count rules usually, like here, let's look at this Qualcomm again. Like in here, you had your first, gap up, gave you a push, it held. So right here, you're not selling, it's just clearing a prior area. So maybe into a 3-day move, you're reducing, right? Because you have like a bull type flag above the 8-day. This actually could be an add, and then you're trimming. So whenever you're really extended from the 8-day, I say it's always good to take a little bit off. And if something's up for 4 days in a row, you stayed for those 4, say thank you, and just trim it. And it's not all or none. That's something I've said over the last 30 years. It's not all or none. You don't have to put it all on at the same time, and you don't have to take it all off at the same time. You could put it in at the right time, or put some in, and then when it triggers and goes, you put in more, and then you pick spots ahead of time to sell some. Like let me give you I'm going to give you a good play I think right now. Look at Eli Lilly. Okay, Eli Lilly has been in this channel now since February. So it's going sideways. So this is how you could, use your tier system, because same thing happened kind of down here in January. You could be buying some small, just to keep you engaged with it, and say, hey, I'm going to buy whatever your tier 1 is. And then when it gets above 795, you're in tier 2. When it closes above 800, you're in tier 3. And then chances are, unless it's a failure and it's a false move, it'll go to 803 and come back in. Chances are, if it breaks above 800 and holds it, this thing's going to go another 80 points. So you try and hold your whole position to maybe 810 to 815, then you let off some, and then you already book some, and then you just manage a trade based on the price action. But for now, you don't have to be in it all. You're in some because it's in the top end of this overall channel, and then once it gets in motion, you add to it. So at this point, you incubate a trade, then you go after it when it triggers. When it's in motion, you let it go. Try and keep your hands, back, and then trim some, when finally it starts hitting some of your targets.
the streaks is important too. Like, and you made that after the consolidation area. I mean, 1, 2, 3, 4. Sometimes they go 6, 7, or 8. But streaks are important, and keeping an eye on those closing prices for the move to continue.
Exactly. A little commitment. That's why a closing price is always important versus just intraday.
All right, well, Scott Redler, the Red Dog, always great to have you on. We get some great guests over from T3. Again, if you want to check out Scott's book, hit that QR code in the bottom right hand of the screen as well. It's in the link in the description. Scott, thank you so much for hopping on with us this Tuesday morning.
Scott, we got to see you in the pool next time. I gotta help you with that stroke. So you work from everywhere. So we'll see you from that pool, and we'll work on that freestyle a little bit.
Oh yeah, you're good at swimming, Joel?
Joel's the swimmer. Joel's
yeah.
U.S. champion over there.
Have you ever done an Ironman or anything like that?
Oh man, yeah. Well, with the Ironman, I like to do. I can bike and swim, but that running, I would need a car. I can't do the running part. But,
You can't say can't. You can't say can.
Oh, running, man! I want to tell you about when I did the turkey trot. My sister beat me. Okay, thanks, Red Dog.
All right. Good seeing you guys, and good luck today. And I'll be in touch and see you guys in the weeks ahead.